This week's big tech earnings reports raising a big question for Wall Street. Are billions of dollars in AI spending still generating returns, or are investors starting to lose patience? We're watching Microsoft, Meta, and Amazon all set to report next week. This as the Fed meets and the conflict in the Middle East keeps oil and inflation risks front and center. Joining me now, Apollo Global Management Chief Economist Torsten Slok. Welcome, Torsten. We got a lot to get through, so with apologies to Chris Berman, the fastest 5 minutes in finance are going to start right now. Google. The market did not like that report. What does it say about Google, but maybe more importantly, next week?
Well, the tech companies are investing a lot of money at the moment in terms of trying to get a payoff in AI. And the market this week was beginning to ask some questions about how quickly is that payoff coming. And that resulted in some wobbles here late in the week. And that, of course, is the conversation at the moment, namely, are we going to see a payoff from AI, and how long time is it going to take before that payoff shows up?
So if we don't see that payout, if we see cracks in this AI story, the first domino starts to fall. Play that scenario out for us. What could happen?
Well, next week we get very important data because we have more hyperscalers reporting, we have Amazon reporting, we have Meta reporting, and we are there also going to find out what are the returns on their investments. Are they investing enough, too little, too much? That's the conversation in markets, namely, what is exactly the path for these investments in AI? And if the path of these investments in AI begin to be questioned more by markets, that could, of course, then begin to have some more volatile consequences, especially for the equity market, because these concentration in these stocks, particularly the Magnificent Seven, has played a very important role in returns now for quite some time.
You have somewhat of an academic history, so let's pivot to the academic side of all this. There's an S curve in innovation that you've talked about, others have talked about. Explain that to us and how this applies to this situation. We might be at the wrong part of the S right now.
Yeah, because what's very important is that we literally are all still trying to figure out how do we implement AI, in what forms do we want to see it used, and in what forms can it really generate some significant productivity gains. So the initial stage is one where we see significant implementation, significant gains. And the question now is, are we beginning to enter a period in the middle of the S where it takes some time to figure out exactly how it should be used? Where are the most productive uses of AI? And once we figure that out, we will most likely get to the other side of the S when we will see the gains come along. But the big question for markets is, how long time is it going to take? Is it going to be a short while before we figure out how to use it? Or is it going to be very quick and then we need to take off again? And that's the debate in the S-shaped form, that the innovation is surely here. It is going to have a dramatic impact. But the question becomes, what is the next adoption, and how long time will it take before we begin to see the gains from that adoption?
So all these questions swirl around, and we have a new Fed chairman with his second meeting in Washington coming up next week. Tell us about what you're looking for there.
Well, the unusual thing is that the Fed is at the moment not giving any forward guidance. In other words, they're not telling us much about what will happen when they have the next meeting. And that has created a somewhat unusual situation that the market, as we speak, with a 40% chance, are expecting that the Fed will actually hike rates at the upcoming meeting. And that's, of course, rather unusual. Normally, it's either a 100% chance that they will hike or 0% chance that they will hike. But now the market is somewhere in between. And that means that almost no matter what outcome we get on Wednesday's FOMC meeting, we will probably have a volatile market reaction. So that's setting up for a volatile week with both hyperscaler earnings on Wednesday and Thursday, and at the same time also the FOMC meeting on Wednesday.
But that's not all. And I shouldn't make light of this. I mean, very serious. We are in a serious military conflict. Bombs could start falling even at a faster rate. So how does this work into all these decisions?
Well, that's why we have these three forces coming at the same time. That is, of course, raising risks that markets could be volatile. If we both have the challenges about what's going on in the Middle East, we also have an FOMC meeting with more uncertainty than usual. And finally, we also have now some questions being asked this week about Google, and of course also next week about the AI story. We still think the AI story will deliver very strong returns and will still deliver a lot of innovation in the economy. But at the moment, the market is beginning to figure out what that implementation, that adoption of AI looks like in the future.
And finally, you've just come back from Washington, where everyone's worried about these Chinese open source models challenging the closed LLMs. How does that play into all this, and what are they trying to figure out in Washington right now?
Well, this was a very important development also this week, because there's beginning to emerge a more significant discussion around, should we just have closed source models, meaning OpenAI and Anthropic, or should we also have open source models? And certainly different players are on different sides of this discussion, but the fact that this debate is now coming more out in the open on Twitter and in the media and everywhere else is beginning, of course, to become a very important part of the debate, because that will determine government policy, what side does the government lean on? Namely, are we moving down the road of only having open source models? Are we moving down the road of mainly having closed source models?
All righty, more questions than answers. We'll have you back for the answers as soon as we know them. Thank you, Torsten Slok.